Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video, for a big earnings session after the close. It's the 25th of July, and it's still 2023. Let's get into it. We have earnings from the big one, Microsoft. And Microsoft is, for the most part, I say, unchanged. This video is taking place directly after the close, so you may have some more information than I do when you're watching the video this evening, or perhaps pre-market on Wednesday. But Microsoft at the moment, share prices are down just a little bit, hit a low, but has come back. What is the expected move on Microsoft? That's what we'll be focusing on in this video. And you'll have this as a reference. So what we're going to be doing for any butterfly trades or trades you may want to put on Wednesday, meaning the market could hit or interact or trade toward one of these expected moves and give you some intraday trades to test or trade in that direction. Or once a market hits an expected move, let's just take a quick peek at the S&P. And the S&P will go to a 5-minute chart. The expected move for today's session was 4607. The market traded into it and then reversed away from it. That's what we're thinking about for intraday and earnings-based expected moves. Back over here to Microsoft, we're definitely not trading 19 handles or $19 up or down. Currently, the share price closed at about 351. We're down to about 346. $4 or so movement with a 20 or 19 expected move. So that'll be one to watch. In other words, not a lot going on for the moment after the close in Microsoft. Texas Instruments, 52% implied volatility, $7 up and down. What's going on here? Down about $6. One way to see it is that looking at the closing price, looking at your expected move, and seeing exactly where the price is trading. And I like seeing it this way with the daily chart off my left and the intraday chart, or I should say the after hours chart. We'll go back to that 1-minute chart on the close. So its expected move is about $7.31. Where is that stock? Down about 6. Meaning its expected move is right under 180 per share. Texas Instruments at the moment, which actually does have a sell swing and a bear position up against resistance or range resistance high. It's going to open up, unless there's a big change, into that 180 print. So that's on the bear side of Texas Instruments. The other would be Visa. Had a little bit of a up, down. Where is the expected move for Visa? Shares are about that 49% implied volatility, $8.58. Where are we? 238. Where are we currently? 239. The bid offer spread's a little bit wide in Visa. On the chart, you can see that there's not much movement. Down a few dollars, up a few dollars currently, and there's not a lot of volatility, not a lot of bid offer spread or trade activity after hours, unless it's about flat. Not much of a change in Visa, but it's down off its highs, 245. Not a lot to discuss there. Finally, because there's so much more to discuss, is Google or Alphabet. Alphabet's had a strong rally, not quite as strong as some of the other stocks, including Microsoft or perhaps Nvidia or some of the other stocks, GE. That was an earnings play that took place a little bit earlier. And that's consistently in my getting stronger candidate list, which is making new 52-week highs on its earnings breakout. And that was from the morning session. Back over to Google. Its expected move was and is about $7. 79% implied volatility, $7 up and down. Well, what's going on with the stock? It's about $7 to the upside. Quick math, only because it's a 10-minute video and we have a lot of stocks beyond these to cover. So usually I will draw out the highs and the lows of the expected move on the chart, and that'll guide the decisions for the next trading session. I'll let you do that on your own charts to save time, but it's about $7 up or down. And Google shares, just do it this way. On your trend line, there's the close up about $7. And that's about where the stock is currently. So that's one we'll be watching very closely into Wednesday's session. quick rundown. Other stocks that had earnings today, and you can see the split. GE up 6%. General Motors down. That's a sell-side candidate that is playing down about 3%. Dow, Triple M. We have Biogen. Triple M is up 5%. Biogen coming off to lows. Danaher, not much of a change, but it is in its trading range. Hit the midpoint target. Just see that. And has traded down from its swing trade target from the bottom up to the mid, and that is the play. Verizon, a little weak stock getting weaker, and the Next Era Energy unchanged in today's session. But it is Raytheon. Raytheon RTX pushed out, broke outside, hit almost a new 52-ish week low, and that is down 10% in today's trade, which actually recovered from hitting a low near about 81, 82 per share. That was well beyond, I think, that expected movement. But surprises do happen. And when they happen, they can be very profitable if you pick the right side of the market, but the wrong side without risk control can be very painful. So we always recommend doing butterflies or some type of risk control trade if you are trading ahead of anything on the earnings side or playing any movement that may take place the next trading session for what I would call fade or intraday trades, or waiting a few days after that for the waters to be calmer, maybe a 3 or 4 day window, as Don might recommend, to be playing in-out spreads or any other type of trade after the earnings have taken place. But we're not done yet. There is still more to discuss, and I'll highlight them here. Tuesday's session, we had earnings. We just saw them from Microsoft, Google, Visa, Texas Instruments, Triple M, General Motors. Tomorrow is going to be a Fed day, and they're going to raise rates 25 basis points. But before we talk about the Fed, Wednesday session, Facebook is going to have earnings, Meta, and Boeing, Coca-Cola, Lam Research, AT&T, Chipotle, we like to call that here at TheoTrade, the overpriced burrito. One little peek at that stock will tell us that even if you want to put a position on in the overpriced burrito, that becomes very difficult from a cost basis. The stock price is well above $2,000 per share. And if you want to play any particular type of option, look at your implied volatility on the numbers there, 88%, 53%, so on. And the implied volatility is well over $100. Problem with this is not much liquidity. Even though it is a stock that we all perhaps know, maybe we've eaten at Chipotle Mexican Grills, but to trading this, there's not really good liquidity, not good open interest, and of course a very bad drive a truck through it bid offer spread. So that stock does not become a candidate. We can take one stock off the drawing board even if we want to play expected move logic. That doesn't fit the criterion because in other stocks maybe you like it, that just don't have good option liquidity or bid offer spreads. So take that off the list. There's still more to go. And Thursday is Amazon, Intel. We'll then have McDonald's, MasterCard, and AbbVie Labs, and not to be done on the earnings side. Friday is going to give us ExxonMobil, Procter & Gamble, Charter, and you see the PCEPI. Well, we're going to have a Fed announcement. They'll raise rates. And then we'll come after that or behind it on a Friday and after what the Fed says, and we'll have additional data on the inflation side. So how do I have the confidence that the Federal Reserve will raise rates by a quarter basis point on Wednesday? The Fed Watch tool tells us so. And that's just what Don and other instructors show here in TheoTrade. It's the Fed Watch tool. And the current number or statistic, breaking it down, the current Fed funds rate is, let's just say 5%. 5% on the Fed funds rate. There is a 99% chance, let's be honest, it will happen. There's not going to be a 1% chance. I say that, but that's the one time it happens. But there's a 99% chance. We'll make it professional. That the Fed will raise rates. We expect them to. Analysts, economists, traders across the board expect them to. It would be a shock to the market if they chose to raise or chose to keep rates the same or perhaps raise them 50 basis points. That's actually what the 1% is. 0% chance they keep them the same. 99% chance they raise them by a quarter basis point. 1% chance they raise it by half, which is 50. We believe in our analysis they'll raise it by a quarter basis point, but we'll see how that trickles through the market. And of course, more importantly, I'd say most importantly, we know what they're going to do. They have telegraphed that to us. What will Chair Powell say about the state of the economy, unemployment, and the state of inflation? And then after he's done, and we see Thursday's GDP, which is usually a lagging indicator, not much to say about that, or durable goods, we'll see what the inflation number is on core PCE, PI. And if that's not enough, we'll have additional earnings and plays next week. But keep focused on these and how these leading stocks do affect the Nasdaq and the S&P, and how the other stocks can affect the Dow and the Russell. And of course, any ETFs that you're holding positions in that are centered on these stocks, these names, and anything else that we haven't covered yet. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for July 25th, 2023.